Today's show is brought to you by TestCube. Testing applications in Kubernetes doesn't have to be complicated. TestCube is your go-to platform for cloud-native continuous testing. With TestCube, you can orchestrate, scale, and automate tests effortlessly right within Kubernetes, catching issues early and deploying with confidence. Try it out today and see why engineering teams trust TestCube to keep their testing simple and scalable. Your test, your tools, your infrastructure, finally together. Check it out at testcube.io/cloudcast.
Cloudcast Media presents from the massive studios in Raleigh, North Carolina. This is the Cloudcast with Aaron Delp and Brian Gracely, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome back to the Cloudcast. We are coming to you live from the massive Cloudcast studios here in Raleigh, North Carolina. Hope everybody is doing well. Another weekend perspective, and a happy birthday to my wife, who I've now known for 24 birthdays. So congratulations to her. Happy birthday to her. Hope everybody's doing well. We got through the NVIDIA earnings announcement. There was a lot of concern in the marketplace, financial markets, technology markets, sort of world and global markets, waiting for NVIDIA to make their earnings announcements this past week, a couple days ago. Looked at as sort of a, are we in an AI bubble? With NVIDIA being the company at this point that is making the greatest amount of earnings and profits specifically tied to AI, maybe excluding Google, although Google's feel like they're sort of adjacent to it. But the world was sort of waiting with bated breath as to whether or not NVIDIA would make their number and kind of give us a sense of where the AI market was, because there was quite a bit of concern that we are in an AI bubble. We are at some point in an AI bubble. I think that's more or less kind of acknowledged by people, mostly because of the valuation of things versus the earnings and revenue of things. But then again, bubbles are subjective. They are speculative. They are at any point in time might be 10 times as big as they are today, or they might pop tomorrow. So, a lot of speculation about what was going on. There was some pullback in the financial markets around, some of the AI stocks and so forth. So what I thought I would do is sort of dig into that a little bit, not so much just, the NVIDIA earnings, but sort of, okay, we've now gotten past the NVIDIA earnings. We've gotten past this sort of, collective side that the marketplace has. What are the next big things that, as people are trying to understand, the markets for this, not just the technology, but the markets around this. What are the next big things for people to be sort of keeping an eye on in terms of figuring out where are we in terms of maturity or bubble or, however people want to go about sort of analyzing and figuring out where we are in the market. So we'll dig into that right after the break. Today's show is sponsored by Mailtrap, modern email delivery for developers. The complete email API that does everything you need it to do. Try it today at mailtrap.io and get 20% off for all plans with the promo code CLOUDCAST. That's mailtrap.io, mailtrap.io. Self-driving cars, delivery drones, and fleets of automated mining machines have moved from headlines to habits, but they can only travel as fast as the tech underneath it. On Interconnected, a new show by Equinix that explores the hidden infrastructure behind our connected future, they shed light on the challenges of scaling safety, where computation happens, and a future where cities are built with autonomy in mind. MIT research scientist Brian Reimer and emerging technology leader Patrina Steele explain how the way we move is changing and where the future will take us. Listen on Spotify or wherever you get your podcasts. And we're back, and as I mentioned at the top of the show, we're going to dig a little bit into the NVIDIA earnings, as people were somewhat concerned about them, somewhat anxious about what they're going to look like. And again, some people might have been anxious about them from a personally financial standpoint. They were worried about maybe they had an investment in the NVIDIA stock, or it was part of their 401k or their retirement or their investment. Others may have been concerned about it because NVIDIA, as well as a number of other companies, large AI companies, are, very much driving sort of the sentiment in the market, and has driven a lot of the sort of growth of the GDP, whether that's global or just in the United States over the last couple of years. And so maybe they were concerned about sort of the stability of global markets and so forth. But anyways, they announced their earnings. The numbers were very good. Let me just kind of grab some headlines from that. Record revenue of $57 billion, up 22% from Q2. So again, this is for again, if you're listening to this, at some other point in time, this is for from November 19th of 2025. NVIDIA financial results, third quarter fiscal 2026. So, Q3 essentially for their fiscal year, which for those of you that don't always keep up with this stuff, fiscal year and calendar year don't always necessarily line up. So this is November 2025, but third quarter fiscal year 2026 for NVIDIA. So record revenue, $57 billion, up 22% from Q2, up 62% from a year ago. Gross margins in the 73.5% range. So numbers were very good. Numbers were very good for NVIDIA. Jensen Huang, sales are off the chart. Cloud GPUs are sold out. The AI ecosystem is scaling fast with more foundation model makers, more AI startups across more industries and in more countries. AI is going everywhere, doing everything all at once. So, Jensen, as he has been for a couple of years now, very enthusiastic about what's going on, very enthusiastic about the growth of AI, as you would expect. So, that happened. That event happened. There was a lot of people that were concerned about it. The markets were obviously concerned about it somewhat. We saw some sell-off around different AI companies, and we've seen some ripples. But their numbers were very good, and their forecast, which is always the sort of second leg, or the second big piece of any announcement, is what are you expecting for the next quarter? I believe their forecast was around 60. The previous expectation for the market was around $62 billion. For the next quarter, I think they forecasted around $65 billion. Again, that's not a guarantee. That's just a sort of what they're sort of signaling to the market that the market can then do analysis around. I think for a lot of people, this was perceived to be a good thing in terms of people not necessarily wanting AI to be a bubble that pops. I think people recognize that right now the valuations of AI are very high, at least for today's maturity level in the market. Maybe we'll look back at this 5 or 10 years ago and say, they were far undervalued for how much value that AI created globally. But at least for now, the sentiment is generally that the AI market is somewhat overinflated in terms of kind of lining up whether it's revenues, whether it's profitability, whether it's the ability to generate enough chips to keep up with demand, whether it is the ability to keep up with data center demand or energy demand or all those other sort of things. So but this was a kind of moment in time in an early part of a market where people were kind of holding their breath, going, okay, are we ready to see the market sort of come down, have a correction, bubble burst, if you will, or are things still moving along in a way that our money is flowing throughout the system, revenues are being generated, profitability is being generated. So we saw that at least from an NVIDIA perspective. And so people can dive into that. I think there's going to be a lot of people who are going to start diving into the financials of NVIDIA. What does it's one thing to generate earnings or cash flow or revenues and profits. It's another thing to really start diving into the business. And I'm sure we'll start to see people who are diving into the business looking at, where do the revenues come from? How much variety do they have in their revenues? They start looking at things like, how well are their customers doing? So how well are their customers paying? Are they paying on time? Are they delayed in their payments? Are they getting inventory back because maybe it's not being used? All sorts of things like that aren't necessarily headlines, but people will begin to look at. And again, those aren't necessarily criticisms of NVIDIA's business, but they are, areas that everybody looks at, financial analysts look at for any company in terms of trying to understand, how strong is their business versus are there potential weaknesses in their business that maybe aren't completely obvious. And again, I'll let other people kind of dive into that. More professional folks who do financial analysts dive into that stuff, and we'll sort of start reading it as it comes out. But as I was thinking about it, I think what we're going to start, having to look at as an industry, and there's going to be people who look at this and go, look, I'm just really concerned with the technology. Can we make the technology work? What are the interesting things we can do? What new applications will come out? And that's fantastic. And we will definitely cover that. I think there's also times when it's important for us to really look at the broader industry and kind of get a sense of, how healthy is the industry, and what are the various aspects of this broader ecosystem we also should be looking at as importantly as we are looking at the NVIDIA earning numbers, right? So I started making a list of some of the things that people are going to start probably looking at more closely, with a bigger picture in mind, right? Because right now there's a lot of focus on, how much funding is being raised, what are the big announcements that are being made in terms of, whether it's, how big is a new model that came out, or how much is one company forecasting to pay another company in terms of, buying GPUs or hosting costs, all those sort of things, and those are fine. I think what we also have to start digging into is, based on some of these huge projections that are coming out, whether they are huge, 3 and 5 year forecast of how much capacity people are going to need, or what projections are for number of users or revenue or whatever. We sort of have taken for granted that AI in general and this whole idea of accelerated computing is being built upon things that don't necessarily exist. It's not that they don't exist at all, right? We have data centers, we have GPUs, we have electrical, sources of electricity, but at the volume that they are being projected, a lot of that capacity doesn't necessarily exist today. And again, some of that we know for sure because we talk about NVIDIA being supply constrained, not demand constrained. So the ability to just build the number of chips that people are expecting is constrained in certain ways, whether that's a TSMC thing or a foundry thing or an Intel thing or whatever it might be. But we start getting into a lot of other things that are worth kind of digging into. So the couple that I've got, first thing I would take a look at is sort of customers of NVIDIA, both immediate and then sort of downstream customers. So, first types of customers would be what you would consider sort of probably their first party, their core customers, the people that are buying large volumes of GPUs. So whether these are the neo clouds like a CoreWeave, or whether they are the frontier research labs like an OpenAI or a Grok AI or whoever it might be, an Anthropic or whatever. What do their revenues look like, right? Are they able to turn all of this investment that they're receiving or that they're churning through? Are they able to turn that into things that are profitable, into things that people want to buy and that are buying them at a profitable level? Obviously, if they are, they likely will have the means to continue to be buying from NVIDIA. If they don't, we'll see different outcomes and maybe be looking for alternatives. The second would be, kind of a secondary, customer revenue, customer success story. So, the people downstream of those model builders. So the automotive companies, the healthcare companies, the government agencies, all of the what we would typically consider sort of end user customers. How are they doing? What do their success stories look like? Are we starting to see a constant drumbeat of success stories coming out of the public sector, the private sector, commercial customers, large enterprise customers, Fortune 500 customers in different regions around the world, in different industries around the world? What does their ROI look like? How are they able to use AI to differentiate their business, to accelerate their business? Are those stories coming out on a regular basis, right? Are we seeing companies say, hey, we wanted this stuff, we're adopting this stuff, this is how quickly we're adopting it, this is how we're adapting our business to it? Do we begin to see more and more of those, right? Because we've seen some negative survey stuff comes out, but again, you're really looking for sort of boots on the ground. How are people using it, and so on and so forth. The third thing I would say is sort of looking at alternative revenues to NVIDIA acceleration, because there are alternatives out in the market. While NVIDIA is obviously the sort of 800-pound gorilla, I think I got that right, Stu. Are they? Maybe it's 900-pound. I think it's 800-pound gorilla. The Google TPUs of the world, the AMDs of the world, the Intels of the world, the chipsets coming out of China, whether it's Huawei or somebody else, right? What are we seeing in terms of those revenues as best we can track them? And in some cases, like, if it's Google, you're probably not going to see them talk about tracking TPU revenues so much as, how many deals are they doing in which they're opening up their TPUs through Google Cloud to other people, which sort of, secondarily tells you, oh, we are not supply constrained, right? We are able to, build enough TPUs to not only satisfy all of the internal needs of Google, from the ads business to the YouTube business to the Android business to the Waymo business, but we're also have excess capacity to start selling that through Google Cloud and so forth. So you're looking at those sort of things as revenues of the customers, but also alternative revenues that are alternatives to NVIDIA. And then you get into what I kind of consider the secondary, really important thing, which is the data centers and the electricity, right? So as we think about the capacity that's being tossed around, whether it's across the large cloud providers or the commitments being made by the research labs to these cloud providers, or the NVIDIA claims of $500 billion in backlog and so forth. I think it's going to be really important for us to figure out a way to measure the growth and capacity of data centers, but just as much, what are we seeing in terms of changing trends for zoning approvals and real estate being available and access to water and all those sort of things, because data centers don't go up fast. They have to be planned. They have to be land has to be identified. They have to be constructed. They have to be certified. They're going to have to find sources of energy to be able to light them up and to be able to run them efficiently. There's a lot of downstream sort of aspects of data center growth, and so I think that's something that you'll see us tracking more and more, is trying to find ways to look at what does that look like, because again, for all of the work that the frontier labs are doing, or NVIDIA figures out in terms of shoring up their supply chain to be able to build more GPUs, if there's nowhere to put those GPUs or there's no way to power those GPUs, some of this stuff eventually sort of will bog down or slow down until those bottlenecks start getting fixed. The next thing I had on my list was sort of kind of goes hand in hand with the data center piece, which is electricity build out, right? We've seen some numbers forecasted in terms of gigawatts that are needed in 5 years and in 10 years and so forth. Those numbers are, in some cases 50%, in some cases, 300, 500% as big as all of the energy produced in the world today, or is allocated towards data centers today. And so, figuring out what that looks like, whether it is new sources of energy that get turned into electricity, whether it's nuclear or coal or alternatives. What happens from a regulatory perspective? Are there regions of the world that are more open to figuring out how to do this? Does the United States begin to be more, sort of less regulative in terms of, regulative is a word, but less regulatory red tape, if you will, or less bureaucracy about allowing new sources of energy to come online. In the United States, that policy can shift maybe every 2 years, given the way that election cycles happen and so forth. So, we may see what's there today with the current, government regime in place change a year from now after elections happen, and people may or may not be happy with how things are going in the country, and that may get bogged down. So that's going to be really interesting to watch. The cost of electricity, as it has so many impacts on just the day-to-day life of people that don't really care about AI, will be a big deal to take a look into. As I mentioned, I think we're going to see more and more people doing sort of deep dives into NVIDIA to kind of give us a sense of, how well is their business doing? How healthy is their business beyond just the hype and the headlines from Jensen, the big, headlines coming out of GTC, but, how healthy is their business, for the things that they can control, as well as the things that downstream they can't necessarily control? How much are they leveraging, the massive cash flows that they now have? I think I saw somewhere they're going to be taking in free cash flows of anywhere from like $60 to $80 billion, as their business grows. That allows them to do a lot of things that they couldn't have done 2 or 3 years ago, 4 or 5 years ago, to sort of help them grow their business, but also reduce bottlenecks for their customers or potential customers. So that'll be sort of interesting. And then I think the last piece is really trying to figure out, of these, $500 billion of back orders, right, that they talk about, and there are plenty of other commitments that are being made around the industry. Is how well are those happening? How much of those? What is the time schedule of those? What are the timetables of those? Are they heavily backloaded? Or are they pretty consistently chopped up on a year by year basis? We're going to look at them in 2026. Did those payments happen? We're going to look at them in 2027. Did those payments happen? How much of that, $300 million, projection that Oracle had from OpenAI, how much of that is happening, versus, what are their sort of cash flows look like and profitability look like? So, I think while we're going to get hung up with one company's um, revenues for the quarter and be excited or not be excited about it, I think people are starting to have a much better understanding, much bigger aperture for what the overall market looks like, from customer demand to customer usage to downstream usage things, whether they're data centers or electricity or other things. We sort of moved past the hey, how big is a model? Is this a frontier model? Hey, it's been 3 months. Is there a new model coming along? I think there are many more things to really kind of explore in this market. And again, a lot of it just is coming from a learning curve that is moving very quickly. People are starting to better understand stuff, but at the same time, I think they're really starting to understand that it is a large ecosystem. It is a complex ecosystem. It is one that is very much being built on the fly, and there are a lot of dependencies that may or may not be within the full purview of any given company or any given two or three companies in a partnership. So excited to be digging into that. I think we'll be digging into that a ton in 2026. The conversation has moved very much from the most basic things when we first started this to what are a couple of the use cases? Will it be open or closed? How big a model should somebody use? To very big sort of ecosystem level, economic level, big picture level of what's going on, and excited to dig into that. So anyways, hopefully that gives you some things to start thinking about. We'll start trying to think about ways in which we can put these into context, have some frameworks to talk about them and track them on a quarter by quarter basis and sort of see where they're going. And I think there's a lot of elements that are going to be interesting to people, whether you are a technologist, an end user of the technology, you're trying to understand the market for your own financial reasons because of your investments in portfolio, whether you're looking at it from a technologist perspective, CTO, or somebody who's trying to build something. I think there's a lot of elements to this that are starting to become a little more clear and in the picture, but at the same time, a little bit of uncertainty around it because so many of these things are new, but yet have dependencies on other things that might be upstream or downstream of what specifically matters to you in your concerns in this space. So anyways, with that, lots to think about, lots to dig into, especially as we start to finish up this year and move into the next year. Lots to think about and analyze. So with that, I'm going to wrap it up. Hope everybody's having a good week, good weekend, and we will talk to you next week.
Thank you for listening to The Cloudcast. Please visit thecloudcast.net to find more shows, show notes, videos, and everything social media.